almost 4 trillion instead of more than a trillion. The Russian Ministry of Finance had to increase the expected budget deficit for the first 5 months of 2025. The ministry cited the critical state of the global economy. In reality, the Kremlin was let down by sanctions in the energy sector, falling oil prices, and growing spending in the continuation of the full-scale war against Ukraine. The forecast for oil and gas revenues had to be cut by 24%. In addition, Russia has already increased defense spending by a quarter in 2025, the highest since the Cold War.
The finance ministry said that the expected GDP growth will be 2.5%, as previously assumed. The inflation estimate was raised from 4.5 to 7.6% at the end of the year. Total federal budget expenditures this year will amount to 42.3 trillion rubles, which is 829 billion more than planned when the budget was prepared. As stated by the Ministry of Finance, the increase will be financed by additional non-oil and gas revenues, which are expected to be at the level of 30.19 trillion rubles. From Radio Free Europe Radio Liberty publication. I think it was more of a convenient excuse for Silvanov when oil prices fell. Apparently, he has been sitting like a cat in the bush for a long time, waiting for an opportunity to come out and say, "No, guys, let me go through you with big scissors." But here is what Silvanov said, a key phrase that was quoted by many economic media, that we will have to be more modest in our desires, and they are actually launching a full audit of expenditures, and apparently we should expect a proposal for some kind of large-scale budget sequestration in the coming months.
The Russian economy is also indirectly affected by the U.S. tariff increase for a number of countries. Even analysts of the Russian Center for Macroeconomic Analysis and Short-Term Forecasting recognize this. In their opinion, the first significant blow will be associated with a reduction in exports of metals, machinery, equipment, and changes in the global energy market, a drop in oil's prices. Then, for the sake of maintaining cash flow, Russian oil companies will severely limit the export of resources.
A global shock can slow down the world economy. For Russia, this will mean significant losses in foreign trade, and with them, a fall in the ruble exchange rate. It may turn out to be quite significant. Now the ruble is overstrengthened, and this can work like a compressed spring. The Russian currency will also weaken with a jump. Exchange rate swings will occur, and the ruble will stabilize only in 2026 to 2027. From the Moscow Times publication.
Russia's pivot from Western markets to Eastern ones has also come at a steep cost. Establishing new trade routes to India and China has proven long and expensive. Meanwhile, the central bank's monetary policy has failed to produce results. Despite one of the highest key interest rates in the world, currently at 21%, inflation hasn't slowed down.
Inflation in basic consumer goods hasn't slowed. It's actually accelerating. When they say money is going into the consumer market, that's where it's going. Into food, daily necessities. The claim that inflation is slowing is based on one narrow factor. People have stopped buying things like cars. But food prices continue to rise. And because people buy these items every day, they're pulling up the overall inflation numbers. I don't see any real signs of inflation easing.
At the same time, 2025 has turned out to be the most well-paid year ever for Russia's billionaires. According to Forbes, their combined wealth hit a record $625.5 billion. However, economists caution that this figure is in nominal US dollars, a currency that has also lost purchasing power. The US Consumer Price Index has risen by 50% over the past 17 years, meaning that in 2008 dollars, even Russia's oligarchs are technically poorer than they seem. Reported by Alexandra Zaslavets, Larissa Petryuk, UATV News.